Hi guys, welcome back to Marant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. I made a comment on Twitter and people are asking me about the AMC Goodwill and what does that really mean. I will explain it right now, what Goodwill is. Well, generally it's just, it's an appraisal for your company. It's mandatory, you do it every year. So in this case for AMC, the appraisal was done and AMC insiders gave their brand and their company a value of $2.35 billion, 2.35. So is that a lot of money? Not necessarily. Like I can show it to you, but I'll even show you how you do that. So right here, $2.354 billion is their worth. They jumped down about 70 million dollars from quarter to quarter. As you can see, 2.354. So what does that mean? I'll tell you what it means. Right here, here's the equation. It's pretty easy. Goodwill equals purchase price of the target company, and that is their assets minus their liabilities. Now, why is that an issue for AMC? Well, obviously, the liabilities on AMC are huge, right? They're billions and billions and billions of dollars. And we talk about this in real time because AMC insiders don't buy shares. And I said they don't buy shares because they know the goodwill of their company. The goodwill price is about $4.50 a share right now. Now, how is this going to matter on quarter three coming up on Tuesday? Well, when your goodwill price comes out, right, you have an appraisal value of your company at that point. If at any time your price of your stock comes below the goodwill price, it then reflects as a negative on your balance sheet. So earnings per share goes down, and I'll explain all that right here as this comes through. So it's called an impairment. So an example of goodwill in accounting involves impairments. Impairment of an asset occurs when the market value of the asset drops below historical cost. This can occur as a result of any adverse event. So declining cash flows, which is already happening, increased competitive environment, sure, economic depression, absolutely, among many others. If an asset or if a company assesses that acquired net assets fall below book value or if the amount of goodwill is overstated, then the company must impair or do write down the value of the assets on the balance sheet. That means you must decrease it. And that's going to in turn show you being less valuable, right? So the impairment expense is calculated at the difference between the current market value, which is the stock price, and the purchase price of the intangible asset. So as you look at this, okay, the current stock price, if it is $5 a share right now, if it gets to $4.52, guys, $4.52, you have a problem. You have a huge problem. Now, I know we're not factoring in APE, and the only reason we don't factor in APE is because you plan on selling it to pay off said debt. But that's not going to change the value of your company. The value of your company can't change until that balance sheet changes totally. And I'm talking about the interest you're paying. You know, EBITDA, whenever you think about it, the I is the main thing. It's the interest you're paying. And Adam Aaron knows this. The insiders know this, and this is why they're not buying back in. So the impairment results in a decrease in the goodwill account on the balance sheet. The expense is also recognized as a loss on the income statement, which directly reduces net income for the year. In turn, EPS and the company's stock price are also negatively affected. So, impairment, what does it mean and how is it going to happen? On goodwill for this case, for AMC, as you guys look at the balance sheet, month to month, week to week, year to year, however you look at this balance sheet, goodwill's always stated here, it's currently at 2.354. If the price drops, they're going to have to show a net loss on said total assets. What happens there, guys, and it's as good as anybody as you look at this all the way down here, you're going to see your liabilities versus your net assets, and it's going to get lower, and you're going to have a bigger gap, and the gap already is at $3 billion. It's going to get even worse. Over time, when your business has no path to profitability, goodwill becomes into effect, your earnings per share comes into effect, and there's no recovery. I try to help you guys with this. I wish you luck. You know it, but that's what goodwill is. Give yourself a value, please, and make sure it's in the positive. Peace out. See ya.